The Reserve Bank has raised interest rates for the 9th consecutive meeting.
The Reserve Bank has once again raised interest rates as expected.
The Reserve Bank is treading a precarious path
as rising interest rates cause further financial stress.
The most aggressive interest rate tightening cycle since the early 1990s recession.
If you're blessed with the gift of consciousness, then you'll know it's been impossible lately to avoid hearing about things like rising interest rates, and inflation, and recession, and the Reserve Bank. But why do we care about all this? Are we facing a recession? And what even is the Reserve Bank? When it comes to everything Aussie money, the Reserve Bank of Australia, or RBA, is ground zero. Its main job is to monitor and look after our economy. You might also hear it be called the central bank, since it's the centre of all monetary movements. Pretty much every country has their own version that essentially makes the rules that all the mainstream banks, like in Australia's case, NAB, Westpac, Commonwealth Bank, ANZ, and so on, follow. The whole Reserve Bank shebang is owned by the Australian government, but they don't actually run it. Instead, the Treasurer, who's this guy, Jim Chalmers, appoints a separate group or board of people to run it for them. The board is led by someone called the Governor, this guy, Philip Lowe. And he, along with his band of 8 other merry money-minded people, meet 11 times each year to make tough decisions about a bunch of things, like how much money should be printed, how to keep people employed, and most importantly right now, what the cash rate should be, which affects how high interest rates are. There's a bit of RBA jargon in there, and at this point you might be feeling
an unbelievably low 0% interest in this story. I don't care!
But there are very good reasons why you should be interested. So let's break down some of those terms, starting with, well, interest. Let's say you want to buy something really expensive, like a house, or a car, or the giant koala located in Dadswell Bridge, Victoria, for whatever reason. Most people don't have that kind of money just lying around, so they have to get a loan from a bank. The banks are like, yeah, sure, you can have the money, but as well as paying back what you've borrowed, you have to pay us a percentage on top. You know, a little extra, a bonus, for our troubles. And that is interest. Interest also works in reverse. For example, if I, that's me, deposit money into a savings account, the bank will pay me interest, because banks can use the cash that I've deposited to loan to somebody else, effectively borrowing it from me. Interest rates rise and fall all the time, but what causes that? Well, that's where the cash rate comes in. The cash rate is basically a fancy name for the percentage of interest the banks have to pay on the money they borrow from other banks. Yeah, fun fact, banks sometimes lend money to each other. That's because each bank needs to have a certain amount of cash on hand at all times to pay out anybody who wants to make a withdrawal. The RBA controls the cash rate, and if the cash rate rises, like it has done recently, then banks will usually pass the full rate rises on to their customers to make more profit. Now's probably a good time to answer why the RBA raises the cash rate in the first place. Basically, it's to curb inflation. Yeah, another piece of financial jargon. Inflation happens when too many people are spending too much money, which causes the price of everything to go up and causes the value of the dollar to drop. Not ideal. During COVID, people weren't going out and spending money. So when restrictions finally lifted in early 2022, people had a bunch of extra money to go and spend, which pushed the price of everything up and dropped the value of the dollar, blah, blah, blah. But supply issues from the pandemic also contributed to inflation. For example, semiconductor chips, which are used in things like game consoles and cars, were in short supply, which meant things like new consoles and cars couldn't be built, and the value of second-hand items went through the roof. And so the RBA started raising the rates. Since May last year, the cash rate has been raised 9 times, from 0.1% to 3.35%. It still sounds like quite a low number, but in reality, it means a lot more financial stress for many households around the country.
Some of them are saying that, Sashi, I cannot have a healthy meal because healthy meal costs a lot of money. I have to pay my mortgage first.
It also means people renting are having to pay more too, because their landlords are having to pay more interest on their mortgages.
It's absolutely, completely overwhelming and stressful looking at the rental market.
You're looking at something like 1 million households, that's about 10% of Australian households, having to cut back their spending significantly.
And the rate rises aren't over.
It's noisy, but raising interest rates is always unpopular. I don't think we're at the peak yet, but how far we have to go up, I don't know.
A lot of people are angry at the RBA and Philip Lowe, and some people are worried that the rising interest rates are pushing us towards a recession.
You seem prepared to smash Australia into a recession.
Can I assure you that's not our intention? We are trying to navigate a narrow path here. The fact that it's all sheeted down to me is a bit unfair, but because it's the board. There are 9 of us, including Michelle.
In a world where we've been in, where inflation's been quite low and stable, people don't worry about it. What we want to go back to is a world where it's just in the background.
A recession is basically when everything in our economy goes backwards. It can happen when people aren't spending enough money on goods and services, causing businesses to cut production and people to lose their jobs. No fun.
We recognise it's really difficult if you've got a mortgage and the interest rate's gone up as a lot. I mean, people are really, really hurting. I understand that, but I also understand that if we don't get on top of inflation, it means even higher interest rates and more unemployment.
As much as people point all the blame at the RBA, this whole kerfuffle isn't just because of them. It's also the banks. Those guys pretty much have free rein to set their interest rates at whatever they like, usually to maximise profits, which is what they have done recently. And they have been making bank. Pardon the pun. The biggest earner is the Commonwealth Bank, who've made a cool $5.15 billion in profit in just half a year.
They're very fast to pass on interest rate rises, but they're very slow to pass on interest rate cuts.
They're like greedy moths to the flame, eating away at your savings. They should be absolutely ashamed of themselves.
Now it's just a waiting game to see how high rates rise. But the government is working on ways to ease the pain.
We are working around the clock to provide that responsible cost of living relief in an affordable way without adding to inflation.
We'll find out more about the government's plan when they release their budget in May. But for the time being, we're probably going to have to hold off buying that giant koala. Damn.